Hey, what's going on, guys? What's going on? Good morning. I want to say good morning to everybody. I'm in my car because I just finished my flight lesson. I'm literally at the airport. I'm training to become a pilot. I'm getting closer. Today, I'm training on how to do cross country flights, which is cross country is anything more than 50 miles. So it's not across the whole country. It's just a 50-mile flight. And there's so much planning that has to happen. You got to plan for the weather, the changes in wind direction, how much fuel you need, all that stuff. So we spent a lot of time this morning learning that process. So it's a lot of fun. Anyway, I want to talk about something I just read that I wanted to share with you in terms of thinking about investing strategy. The media industry is really in trouble. Last night on drboystv.com, I did a long live stream with Tierra KJ Williams, aka Miss Black Hollywood, about what's going on in Hollywood. And as you guys know about the Hollywood writers' strike, in the strike where the actors and the writers are together, pretty much shutting down Hollywood. It's a big deal. It's really shifting the economic landscape of the space. I don't know what that's going to look like long term. But I wanted to kind of give you some areas where you got to be careful with these media companies because they are in trouble right now. Three areas where they're in trouble, according to CNBC in an article I just read. One is traditional television is pretty much dying. Bob Iger, the CEO of Disney, has talked about spinning off some of the television networks and things like that. Traditional TV is in trouble because everybody's streaming, everybody's doing, YouTube and all these other forms of media. They're not really going to traditional TV as much, and so that's one variable that they're dealing with. The second variable that they're dealing with, and by the way, let me know if you guys can hear me. Give me a yes if you can hear me, okay? Because I want to make sure my audio is coming through all right. And also feel free to shout out your city, put your B1 in the chat, stuff like that. The second thing that's happening, Sizzler, I see you in there, is that advertising revenue is pretty soft. These companies are making money from their ad-supported networks and tiers that they created, which is beneficial in terms of helping them avert the financial emergency they ran into after 2021 or so. But it's still not is what they would like for it to be, with the economy kind of having some uncertainty there. Ad revenue isn't as strong as it might traditionally be. The third thing that they're running into is something that I've been talking about for so long, and I just don't understand why others didn't see it. Is that streaming is not profitable the way people think that it is. It makes sense, right? A lot of people wanted to do what Netflix did. They said, "Oh, this is great. We can get these subscribers that'll pay a certain amount of money every month. That's consistent revenue." But what they don't understand in Hollywood is that you have to manage your costs. They are so bad at cost management. I don't know if they just feel like they have to spend this much money, but they just blow so much money. And so you have networks like Paramount that were able to increase their subscriber base like crazy with shows like Yellowstone and all that. But they paid so much money to Taylor Sheridan and all these other writers and actors and Kevin Costner and all that they ended up losing $1 billion. Disney grew Disney Plus like crazy, but they were losing money like crazy. So now they're realizing that you can't just grow insanely without thinking about profitability. You have to eventually become profitable. So shareholders are making demands. Shareholders are getting angry. Shareholders are saying, screw you and your big dream of having this big empire. Empire building is literally a financial theory. There's a whole financial theory about that, where if CEOs have too much free cash flow, too much access to capital, they engage in empire building where they're just growing just to grow. They just want to have the big Death Star that's going around and eating up planets, and they don't actually think about how can I actually make a profit. So media is struggling because they don't invest conservatively or intelligently. They just throw tons of money at movie stars, hoping for the best, making these major deals, paying all this money, and it's not smart. So that dumb business is getting them in trouble now. Disney's having some problems they got to clean up. Paramount has big problems they got to clean up. You saw Paramount sold. How many of y'all saw that Paramount sold BET to Tyler Perry? Did any of y'all see that? That Paramount sold BET? Well, Paramount wasn't just selling BET; they were selling other assets because they put themselves in a financial hole. The only company so far that's doing pretty well with this new model is Netflix, and that's because Netflix has had CEOs or have CEO and some executives that understand what was going on. Netflix has been a great investment. I made a ton of money on Netflix stock, and I was really happy to be an investor. Disney, I sold my stock because Disney investors have lost money in the last 5 years, which is atrocious and ridiculous and pathetic. So anyway, that's it. I just want to give you guys an update. If you want to get Dr. Boy's profit alerts text right to you, as well as my $5 a day investing plan sent to you, just text the word stock to 31996. If you text stock to 31996, I'll send you profit alerts. Also, this podcast is on Spotify, so you can look me up on Spotify and you can find me there. I assume you guys can hear me okay. For some reason, the comments aren't coming through the chat, but I'm going to keep on talking as if you can hear me. And I want to say, I hope you guys have a great day. I hope you have great investing. And also, if you're looking for me on Instagram, my Instagram, as you might know, they removed it for some reason. I have no idea. They do these things. So you can follow me at Dr. Boy's Finance. I'm still posting all the time with all kinds of stuff. And so if you'd like to stay connected that way, feel free to follow me there. But getting on the text list is better because if in case they do kick us off Instagram for some reason, we'll still be able to stay connected. So you can text stock to 31996. All right, guys, I'm out of here. Have a great day. God bless you, and I hope you make a ton of money. I'll see you soon. Peace.